All right, what's up, Tech? Super excited for today's video. We're going to be giving another market update. All right, after the market update this morning, we're going to start off on the VIX daily chart. Please remember, go ahead and like and subscribe if you find any of this useful, and comment below. Let me know what stocks you want me to analyze next, okay? Because I do a viewer request every single week. But I'm going to go ahead and jump straight into this. All right, we can see here on the daily chart, huge, massive puke of a red candle on the VIX. Okay, I gave a little bit of a forewarning of this pre-market in the VIX update. Okay, I said we're at our 50% retracement level of 28.69, and below here, VIX is probably going to keep dropping, right? As you can see up here, this is Fed meeting and rate hikes. This is the price levels, okay, 31 to about 34.55. These are the price levels that we've been going to every time there's been a Fed meeting or a rate hike, okay? We come up to these levels and then we drop very sharply, all right? If we look here from those highs down to here, very significant drop, okay? Let me zoom this down a little bit so you can actually see that. All right, and but like 30% drop on VIX right there, 31% drop on VIX right there. So, big drops once we come up to these price levels. And what do you know? Here's the recent Fed meeting and rate hike, the 75 basis point hike. Okay, and what have we done? We've now dropped 23%. Okay, in 16 trading days. Right, that's like about 2 weeks worth of time. All right, so if you're prepared for this, right, and you're noticing, okay, well, we have the Fed meeting, we have these rate hikes. Why do why does everything keep crashing? And then why does it start recovering right afterwards? Well, what it is that the market and market makers, institutions, hedge funds, their pricing and volatility is going up every time that these meetings happen. And then once Jerome Powell actually does what they planned and what they priced in, now they can buy back in because things went according to plan. It's like, okay, well, they did what we expected them to do. So, everything that we priced in is now valid, and now we can try to start reinvesting again. All right. And that's when you're going to see the volatility index dropping. And that's a good time for some possible swing trades. Okay. So we'll go down to the 1 hour chart now. Okay. And we'll break it down. And it's been painting a picture very nicely on the 1 hour chart. Okay, we had a nice sign of a rejection here right at our 180 SMA and also the Bollinger Bands. Okay, if you're interested in this video and like the setup I have on my screen, how I got these support and resistance levels, I'm using the Fibonacci's. Okay, I have a video in the top right hand corner on how to use the Fibonacci's. All right, and how to get those set up, and some of the ways that I like to use them. And then I also have a video on the Bollinger Bands, okay, just explaining, how to use the Bollinger Bands, how to set it up and trade it yourself, okay? So we see here that we're at the top of the Bollinger Bands. We're hitting the 100 SMA. This is a nice area to see a rejection. That's what you want to see, okay? So we do get the rejection at the top of the Bollinger Band and the 180 SMA. So two strong signs of rejection. So you can come in here and enter long positions in the S&P 500 because as the VIX goes down, the S&P 500 will go up. Okay, so that was our first sign. Our next sign was flipping 29.75 from support to resistance, and we did that. We flipped it here to a resistance level, and then this was our next support level, 29.32. We went ahead, tried to find some support there, flipped it to resistance, traded below there, hit our 50% retracement level. Okay, and ended up making that resistance. All right, and if we look here, all right, again, this is the volatility index. Okay, so what this is showing you is it's giving you the market idea of like volatility when things spiked. So now you can know at what time, right? So we can see here at the 10 a.m. candle, so this candlestick embodies from 10 a.m. up to 11 a.m. right in time. We can see that at one point it opened up all the way down here. Okay, so this candlestick closed down, we opened up here, and then the VIX shot up. So it looked like, oh no, like volatility is going up. The stock market actually started pulling back and went negative on the day, because what happened was VIX made new highs on the day, so the S&P is making new lows on the day. This tricked a lot of people out of going long in the stock market today. And we'll really break it down a little bit closer on the 1 minute chart. Okay, we'll take a look at the 1 minute chart of VIX and a 1 minute chart of the /ES, the S&P 500 futures. Okay, the first thing I just want to show you is still on this 1 hour chart, because this is You know, one of the main charts that I'm watching, especially every single day, all day pretty much, is the VIX 1 hour chart, VIX 5 minute, VIX daily, VIX weekly, kind of going in between those, having a couple up on a screen, right? On one of your screens. But so that's our first rejection sign, okay, that we head lower, right? And then here we end up trading below, because this candlestick, it was crazy. I'm telling you, if you're watching it in real time, you're looking, you're seeing, okay, we're starting to get rejected here. We come up, we get rejected there. It's starting to look like it's going to close here, and then it gets rejected there and comes down and opens up here nicely. Okay, so we flipped that to resistance as well. We came down and flipped 27.61 to resistance as well again. All right, so we broke, you know, we basically had three rejections at our resistance levels. Okay, we had the middle Bollinger Band rejection, we had the 28.69 rejection, and we had the 27.61 rejection. And VIX fell down 7% today. That's a pretty significant move. All right, again, we'll go down to the 1 minute chart now, so you guys can really take a good look at it. All right, and I've highlighted that oval. Okay, so you know, this was on our 1 hour chart, that rejection along the you know, the middle Bollinger Band. Right, that's what this time is in here. And if you look, you know, you can see on the 1 minute candlesticks, we came up really quickly and then we came down, did not find much support, and just kept going down. And so this is going to be your low of the day on the S&P 500, because if you look, VIX came up and then it went even higher, meaning the volatility in the market rose even higher, driving the prices lower. Okay, but you know, that was the high on VIX, and after there, it gave all the signs we needed on the 1 hour chart. We got the rejection at the middle Bollinger Band. We got rejected here. We got rejected here, and VIX just kept pushing lower. And ever since this moment, if you look at the time down here, okay, it's about 10:30 to 11 is this little bubble. We'll go to the futures now, /ES. And I have it drawn up very nicely for you guys as well. All right, and we'll go ahead and take a look, and we can see this is market open. And remember, I said VIX ended up making a higher high, you know, intraday there, and you know, triggering people out of their stop losses. That's what happened. We had the market open here. We had a nice push up from institutional hedge fund money. They make their position, right. A lot of times they set the mood for the market right at open. So they come in, they buy in right at market open, you know, with lots and lots of money. Okay, and those buy orders fill, driving the price up. There's no new buyers to step in the market, and things start dropping, right? And people are wondering, they're like, oh, well, I just bought in up here. We pushed up so hard. They start selling. You know, we try to see a little bit of buyers, and really that's just people taking profit on short positions. We drive lower, we break market open lows, right? And now people have triggered a lot of their stop losses. Okay, so now these hedge funds, they can come back in. They're the ones buying your stop losses. Okay, they're the ones triggering your stop loss. They can see those open orders on the order book, and those market makers will be like, oh, hey, well, let's go long, but first let's go ahead and fill all these stop losses below market open, and we'll gain liquidity that way. And that's how we'll be able to come in and buy in on the market. And if you see here, this is the bubble. Okay, 10:30 to 11 right here, was our lows of the day on the S&P 500. And we look at the ES futures, we see that we had a very nice 2% rally from the lows to the highs, and this was market close here. So, you know, a really significant rally, and it was very easy to tell it was, you know, coming. There was a lot of signs, and it was a really good trading day overall. If you were able to interpret and you were watching the VIX. Okay, so, you know, again, here's that 10:30 to 11. We see that, we know that VIX is going to most likely get rejected here and fall. And if VIX starts falling, the stock market in general is going to start rising, most specifically the S&P 500 and the S&P 500 futures. Okay, so there's that 10:30 to 11 bubble. Again, we'll look back at the VIX. Okay, and here's that 10:30 to 11 bubble. And from there, it was a straight, you know, just drop down. Okay, so thank you guys for watching the video. You know, let me know what you want to see next. Do you like these VIX analysis? Do you like the futures analysis? Do you want me to do this type of style analysis on some other stocks, or do you guys looking for any other type of trading strategies? Let me know.